Okay, so, gang, well, we're pretty close to the election, all right? And I never seen such nonsense in my life. I'm first going to go over the stocks, though. I'll tell you where I think we're going to go. I think we're heading for a very nice correction in the stock market, which we need. Because if you, every, from President Bush to Obama, they have failed. Every time that the market, we have a reset in the market, like we had here, right? Where it corrects itself. Okay, that is good for markets. These are good corrections. That's what you need. This one was ready to correct right here, start going down this way, and they stopped it. Instead, they artificially popped the market up with a massive stock buyback program of trillions of dollars, 650 billion, I think, a month. Uh, so you've got to have these pullbacks because these are called recessions. And the reason why you need these to go in a recession, so companies, government, individuals take their balance sheets, get rid of their debt, and when they come, and then what happens when that happens, and they come out like right here, the first one, if they let us go into a recession right here, okay, we would have came out and our GDP would have been created about 400,000 jobs a month, good jobs a month, not the 150 we're doing, okay? 400,000. GDP of 4% creates 400,000 jobs a month. When you don't let it come back and you don't let it go into a recession and clean up your debt, that means the debt keeps piling and piling and piling. And then worse, what these morons have done is they drop the interest rates. So we got all this debt. It was piled on the way up here, Doc, all this debt. But this is the one that was the killer. All this debt here, housing debt, and all the debt up here. Okay? Now, this debt didn't go away. This debt is still here. All that went away was the purchasing power. Prices dropped. That's called a deflation. So we got prices deflating, but all this debt now comes out to $175,000 per person. Man, woman, and child. Our share of the 20 trillion is 175K, each man, woman, and child. Now, instead of getting rid of this debt, which was combining down here, okay, making like a big haystack. Now they start again. This time the morons go, hey, let's drop interest rates to zero so we really get a lot of debt. So now we got so much debt, it's incredible. We got the 20 trillion, but that's not it. Nobody ever talks about the unfunded debt, Medicare, Medicaid, Social Security. That's another 126 trillion in debt. We're never cleaning up our debt. All the bubble masters, when this comes back down like this, they're going to start another bubble. They have to. They have no choices. Because we have no jobs, no good manufacturing jobs. We took our manufacturing jobs and we shipped them overseas, and we shipped out $80,000 a year jobs out overseas, and we brought back $28,000 bartending kind of jobs. Wow. So if people don't have any money after they pay, especially now, after they pay their rent, which is unbelievable, which some places, I mean, I take San Francisco, but it's nuts. But let's just say normally it's about 40% of your take-home income. Okay, 40% of your take-home income is your rent after the employer takes your tax out. That's ridiculous. Healthcare is killing you. That's going to be about another 30%, okay, or 40% in some cases. So even 30%, okay. So you got almost 70% of your income is going to rent and healthcare, and then the purchasing money that you have left, okay, you have say 30% left of your take-home pay is not worth anything because they keep printing and printing and printing money so that they can drop interest rates to zero and drive the stock market up. So that 30, you don't have the buying power anymore. So it's down to about 50. You got 30,000 in units, paper units, but they're only worth about 15. So what happens with that? When you have all this debt accumulating up here, okay, that debt is what's going to cause another collapse because what is happening is you can't have the stocks going up 7 times faster than earnings. Okay, so think about this. We had a 138% rally. Our growth in our economy is 1.6%. How could you have a stock market go up 138% and your economy is growing 1.6%? Does that seem healthy to you? That's called the bubble, because they always have to do bubbles because we shipped all our jobs overseas. Obama focused not on jobs, but on Obamacare, the unaffordable care. So that means when we don't have jobs, we don't have good income, and rent is high and everything else is high, and we don't have any money left, disposable income left, and you got all this debt piled up here, there's no place for this market to go. So what happens is, unless they keep feeding the monster with 0% money and easy credit, it crashes. So the more debt they let people have, like right now, banks are sending out more credit cards than they've ever sent out. They're targeting people who have the worst credit and sending them credit cards knowing that they'll use them. But because they charge them 20% interest, the odds are they can lose, like, I forgot what it was, something like on 5 cards, and they make so much money on one person it covers those losses of 5. So this is all propping the market up. 0% financing, more credit. It's ridiculous. Okay, so this is going to be one of the biggest opportunities to short the market. Now, how are they going to start the next bubble? Well, they'll come up with something. They lied about this one. Remember what they said about this one? They said, oh, we're going to put $3 trillion into QE. We're going to buy bonds. Corporations are going to take all their profits, pour it back into companies, and then they're going to buy machinery and information technology, and they're going to be building buildings, buying land, and that's what grows your GDP, by the way, your economy. Your economy, you know, most people don't realize your economic growth comes from company CEOs spending money. That's right. But they don't spend money when they don't have confidence in the market. And they say, well, we're going to push the stock market up. So their price of their company's at $10. Well, we're going to push it up artificially to $20 for them without having to work for it. They don't have to have any earnings, any profits, nothing. We're just going to push it up for them. That's going to excite them to pour all their money back into their company, and then wages will go up. And now we got new machinery and equipment. Productivity will go up. We'll create so many more jobs, and we'll fix our roads. And that never happened, because when they moved the stock from 10 to 20, the CEO knows the stock's not worth 20. So he made a fortune from 10 to 20. So he goes back to the Fed and he buys more money from them at 0%. Comes back in and he buys more stock. He buys even more stock to push the stock up even more to exercise his options. Then he goes back again, gets more money, 0% money, and then he buys his own stock, pushes it up again. In the meantime, what's happening to the guy down here on Main Street, the workers who make the country go? They don't have any money. They're going broke. They're using their credit cards. So when this bubble crashes, because we don't have good jobs, what gives us good disposable income after we spend all our money that's necessary in healthcare and our car and our college education, all the stuff, we don't have enough money to go spend. So they have to create, because you don't have money to move the stock market up. Now, you don't have enough money to go to the store where the company makes good earnings, good profits, and pushes their stock up. So they come in, and instead of, you can't do that because you don't have a good job. You have a part-time job, and after paying your rent and everything, you don't have enough money to go spend, so company stock will go up. So what they'll do is they'll rig the market to push the stock up again. And probably another QE is what they'll do. And that's what they keep doing. And then all of a sudden this market will crash, and we'll keep they keep making these bubbles that crash so they can start another one, because they always make their money on the way up. They make their money on the way up because they can't make their money by selling stuff to people and good earnings of companies and buying stock because companies have good earnings. How can they say people aren't buying anything? They don't have any money. So they have to push the stock up in a different way. And they found this QE was the way to do it. So we'll just keep going through life for the next 100 years. We'll just keep getting these bubbles. And so it's a beautiful thing because you can make a lot of money. If you have a simple chart, you don't have to be a genius. You don't have to go hire some broker, as long as you have this chart right here, which tells you simply when to buy and when to sell. You see this? When it's red, you sell. When it's green, you buy. It's that simple, okay? And give you one example. Kramer told everybody to go buy S&E. I hear this stock, right? He said, go buy it. Look, it's red. It's coming down. Why would you buy something that's coming down? What are you, nuts? Another guy came out today and he said to buy UA. He said, it's time to buy it. It's down here. What do you mean time to buy it? It hasn't turned green yet. You wait till it turns green. When it turns green, then you start buying it. When it turns red, you dump it. It's that simple. So the economy is in such bad shape right now that the dollar is going to continue to keep going up for the wrong reasons. And when the dollar goes up for the wrong reasons, that really hurts the economy, because that dollar keeps getting stronger and stronger, keeps going up, and that kills companies' stock because they can't compete. So all our stock prices will be suppressed going down the more this dollar goes up, all for the wrong reasons, okay? It's only going up because our economy is just a tad better than everybody else. Boy, that's a sad state of affairs, isn't it? So we're the less dirty towel in the laundry basket, the dirty laundry basket. You know what I mean? All right. So why don't you just join my gang, get this chart, because you don't care what these gangsters are doing. Green, you buy. Red, you sell short, okay? So that's the problem. The market is heading for a big crash, but how long can they hold the market up? Well, as long as they got the printing machine, okay, and as long as they got willing buyers, but that's the problem right now. We've never seen our big boys, our banks, our mutual funds, our pension funds, they're all going out of the market. We've never seen so much money leaving the market. So we're stuck. We've been stuck in this range, for 3-5 months now. So we're getting a beautiful setup for a short. Join the gang. I'll work with you, and let's catch this next crash that's going to come down just like this for sure, 100%. Not a guess. It's just when. See you on the charts.